And one thing unexpected is I wasn't even thinking on Friday. I forgot to announce it. I had actually totally forgotten about it, but we went through the time change here in the U.S. Um, we're in that awkward like 2 week period between when the U.S. changes time zones and the rest of it. It usually takes about 2 weeks for kind of everybody to switch their time zones over. I believe there's about a 2 week delay between us and like the European and London time zones. So we'll go ahead and take a look here. Being a bit more cautious here this morning, the way that we approach it, because Friday wasn't a bad day. It was kind of we got some mixed results. We had went short here on the pound and got stopped out right as class was ending. But we also I went long here on New Zealand, which was our other trade, and pretty much ended up being right at break even on Friday. If we'd have been more patient, a little bit more patient, I was being a little too aggressive, but I thought with both those trades, one of them would reach a profit, which essentially means, break even. If you have two trades on that you think might go in the same direction and you're short on one and long on the other, pretty much you're not assuring yourself, but setting yourself up for kind of a best case scenario to be a break even standpoint. So approaching the market here this Monday morning, we need to be a little bit more cautious. So let's go ahead and just start talking about what's shaking out. You can see one of the odd things is like euro dollar since Draghi last week has been highly consolidated and just not a whole lot of movement here, as has been the dollar Swiss. Had a little bit of drop in the dollar, very much consolidated. Dollar yen's been consolidated. Pound rose steadily on Friday. Since then, it's consolidated. So everything's kind of looking sideways. So we're looking at a market right now to where I think it's still trying to make up its mind on direction. So we don't want to be too overly aggressive on our approach. So we're going to kind of take it easy a little bit. Probably wait until after 9:30, after the market's open, and then see where that takes us. It is a big news week this week. Here, let me go ahead. I need to pause my screen. There's a couple of things I need to shut down, or else we're probably going to get some issues here. So let me shut down a couple of things here. There we go. Replay it. Do have a big news week coming up this week. Let me go ahead and filter this for this week. There we go. Today, not so much. Today, we do have 3 p.m. Reserve Bank of New Zealand. Graham Wheeler's coming out and talking monetary policy minutes over in Australia. A monetary policy statement tentatively coming out in Japan. I don't expect them to be even more aggressive than they were last time, but you never know. And then tomorrow morning really starts kind of the start of the big news week with retail sales and PPI coming out at 8:30 a.m. Remember, those numbers all came out really well last month. The core retail sales beat came out at 0.1%, and they actually revised the previous number. PPI came out on the positive side at 0.1%. They haven't really changed the forecast. In fact, they've brought them down a little bit. So the retail sales and PPI numbers tomorrow morning actually they could have a huge impact on the market. You could see quite a bit of volatility on the dollar surrounding those particular announcements. And then once we get into Wednesday, big numbers just keep coming out. You got the claimant count change and average earnings coming out for the pound. Obviously that's anything having to do with employment in the UK is going to be a big number that could cause some volatility. We have CPI coming out for the US dollar on Wednesday morning. This is kind of Wednesday is going to be a big news day because you got your employment report coming out in the pound with the pound. You got your CPI coming out for the dollar, and then You also have at 2 p.m., you have the FOMC statement and an interest rate announcement. I know, as far as the Fed goes, the consensus estimate is for them to keep rates unchanged. And I truly believe that that is what's going to take place. The FOMC announcement on Wednesday could also lead to quite a bit of volatility when it comes to the dollar, because this is one of their interest rate announcements where they have, they'll have the interest rate announcement, they'll have the press conference, so Yellen will be answering questions. It's all going to be based on their forward guidance as far as their statement goes. Most people are expecting them to just be neutral, as do I, just be neutral, kind of say, hey, they'll probably be neutral to slightly hawkish based on what numbers have come out. But it doesn't mean that there won't be a lot of volatility surrounding the dollar on that. It's just hard when I don't think there really is any expectations of them raising rates further. So I think this would be the time. It honestly would make sense for them to do it because the dollar's been getting weaker. So you never know. But yeah, this is one of those things to where I believe the consensus estimate is going to be the correct one, unchanged. Their statement will probably be much like the previous one. We can talk more about that on Tuesday and Wednesday morning. And then as we go through, we just got a slew of just high impact news announcements. So you want to tread lightly. The Swiss National Bank has their interest rate announcement on Thursday morning. They probably are not too pleased with how strong the Swiss has gotten over the last several weeks. You never know what they could do. I can almost assure you that Jordan will come out and say something along the line, reminding the markets of that they're ready to intervene in currency markets to weaken the Swiss. 8 a.m. you got the British pound coming out with their interest rate announcement. There's not supposed to be any big change there, but still, a lot of volatility. So every day we've got some bigger news announcements. Friday will calm down a little bit. CPI in Canada. Then you got the consumer sentiment, which hasn't been a huge mover of the markets. But up until then, today and Friday kind of are our only breaks, if you will, from news announcements. It's very hard to make a call on which direction those news announcements will go because of the fact that it's just tough. Right now, the market is in quite a bit of uncertainty, which kind of mirrors the trading results so far. Is the uncertainty surrounding the markets has been leading to, just a really tough route to go in trying to analyze what the prevailing trends are in the markets. As far as other news from today, the global markets are all up. Asia was up, Europe was up. However, the U.S. futures right now are pointing down, not by a whole lot, but just slightly. Oil's down 2%. Big news week. I'll fill that in later, but that's why I kind of went over it. There was too many things to list as far as big news week. The main news coming out this week is the FOMC announcement at 2 p.m. on Wednesday. That's going to be really what the basis for all the news this week is going to be. There'll be a lot of volatility on retail sales and such, but there won't be a huge amount of, of directional move. I don't think. I think like retail sales and PPI are going to be kind of those whipsaw moves because people are going to, even if it's good or bad number, people are just going to kind of sit on the sidelines, possibly a little bit as we head in the FOMC announcement. One thing I will say about the FOMC announcement, if you had to err to one side or the other, you'd probably err to the hawkish side based on what our economic numbers have been as of late. So you'd almost favor trading into a little bit more of dollar strength as we get closer. Today, however, you want to look at trading more on a technical level. With that being said, let me switch gears here and just kind of, now that I've shown you what's happening kind of around the board here, and I'm going to switch gears over here to the dollar yen. Dollar yen has been mainly sideways, and one thing I was noticing here is that we do have, we had this big down move, then we had this little double bottom form here, made an up move here towards the top. And one thing I have seen with this consolidation on the yen has actually been stronger. And as we head into like the Bank of Japan and their monetary policy announcements, you never know what could happen with them when it comes to those types of announcements. But I would almost favor the yen to be a little bit more to the strong side, I should say, especially if we get any type of downward momentum in the markets today with the U.S. session opening. I think there could be some carryover into the Japanese session if we do have some downward momentum. But you see there's little head and shoulders pattern forming right in through here. See, the yen has actually broken lower here. It was coming higher in this uptrend, and now that it's consolidated, it's starting to break lower. It's already at the -5 or more. I'm going to wait until after 9:30, until after the market's open. It's not a real strong head and shoulders pattern, but this is more like trading a breakthrough consolidation. But I do think if it breaks down into a new low here, that we can get a little bit of a downward spike here on the yen, and it has plenty of room to do so. But yet again, I am going to wait until after 9:30. I'm going to wait until after the U.S. markets open. Futures are signaling down. A lot of the yen strength in the last 4 or 5 hours has been based on the fact that Europe's been up. Europe opened up. Well, actually, it opened more neutral than went up, and I think that led to a little bit more appreciation here. But with all this consolidation, much like we were looking at New Zealand last week, if it breaks through these consolidation levels, we could have a little bit more of a strong or a more volatile move to the downside. It's already -5 on the 1 hour totals. It's already -5 up in here. Or if you wanted to after 9:30, you could look for a close beneath that neckline to be a little bit more for a little bit more assurance of direction. And why are we waiting after 9:30? Well, if we would have waited really till after 9:30 to check direction last week, we wouldn't have had one winner and one loser. We would have just had one winner. We wouldn't have taken the pound trade. The U.S. market open has been it's either, a lot of currencies have been reversing during the U.S. session. There's not a whole lot that makes sense right now because, markets went up. Dollar got weaker versus a whole lot of currencies. So and not even the yen didn't even really get that strong, or the dollar yen pair didn't even get that strong based on the market heading in more of a north direction last week. So it's been a bit of a weird market here as of late. Still trying to make sense out of it myself, but until then, that's why we're kind of looking. That's why we're looking for more opportunities with just trading technically on this. So let's see here, 1.810. And then I wouldn't look for a huge amount of volatility to the downside. I would just look for a limit, 1-to-1 risk reward. And again, if it looks like it's siding out, we'll just have to wait until after the market. Let me put that on there. Wait until after 9:30. And we are, since we're right in the midst of the U.S. session, and we do have some consolidation, we're just going to look to trade the market in either direction. We're going to wait for it to confirm something for us. Dollar weakness. There we go. There's a whole slew of ones you could kind of choose here. Phil said he was short the pound yen on a London breakout trade. That one's, that one's not looking awful right now. I mean, you look at the pound yen right in through here. It's making that same type of consolidation. I think you can almost look at trading here. Let me actually get a horizontal support level in through here. There we go. If you're like short on a London momentum trade, Phil, that's not a dead trade yet. It's consolidating. It's going to break out in one direction or the other here. You can see it's sideways down in here. So, I mean, it's not really showing any type of, it's not really showing one side or the other that it's favoring. Last week I went short. This is more consolidation right in through here. I probably should have been a little bit more patient, but it was just going so negative at the time. It's showing some buying pressure in through here. It's at like a plus 15, but it's also distinct. It's making some slight lower highs on here on that trend line. And until it breaks out, you don't really, these big shifts in the imbalances, when it's this tight, you don't want to trust it fully, because you would rather see this thing breaking out in one direction or the other to trust in those numbers. You can almost look at trading the pound really in either direction. If you wanted to trade it based on dollar strength, you could look for a break down through these lows, or you could even trade into dollar weakness. Don't really have to trade it into dollar weakness. The fact that oil's down 2%, I think the oil rising last week was one of the contributing factors to the pound going up. The pound has been seesawing, like I talked about last week, between the fundamentals of, I think kind of some of that Brexit fear has worn off a little bit on the pound, and now it's acting more like a commodity currency. So with oil being down today, if we get any kind of downward momentum in the markets, we might see a shift to the downside in the pound. Or, if we can get a solid break or a close above this high, you could actually look for further upward momentum on the pound, because it's certainly consolidated in through these levels. So if you're short on that London momentum, what I would suggest is, wait until after 9:30 and see what happens with the opening of our market, because you could start to see a bit of a more downward momentum hit on the pound. If the market starts to fall and oil continues to fall, you can quite frankly see this pound probably come down a little bit. It made a huge move up. I wasn't expecting this huge move up. I mean, that was kind of one of the biggest movers on Friday, was the pound, and that 150 pips that it moved to the upside from low to high. So, it had a pretty large move. I'm talking about from where we stopped class, 14279 to 1.42. Yeah, about 150 pips within 3 hours after we got out of class. And you got to learn from your mistakes. That's why we kind of wait until after the market closes. I'm sorry, market closes. Market opens. The U.S. markets, to see which direction to take it. But yeah, the recent trend on the pound has certainly been up. as has been all the European currencies have been in uptrends versus the dollar. So it's not such a bad idea to look for dollar short trades on the pound either. You could literally look for buying the pound in either direction. Or look for a sell entry. If it reverses course. Or in this case, if it were to just go negative on breaking these lows, now that it's gone +5, if it goes just negative and crosses over the 0 line. Remember, all this does is measure market maker activity. This really has, one thing I try to remind people of is on this PitView, it's not something that measures really price. It measures bid and ask activity, and the totals measure kind of an algorithmic total of all the liquidity providers, but it's not, sometimes you'll see it go up as something's going down, and it just means if something's going down, there may be closing positions or exiting or profit taking off of positions. But it is nice to confirm, because before something moves, the bid and ask generally has to move, or while something's moving. In this case, it makes it pretty simple, because you could put your stop, stop 1 pip below support. Depending on what direction you went. And you could look for a limit of 1-to-1 risk reward. And this would, just like the yen, it would be your way of looking at trading the dollar, once again, in really either direction, whichever way it shows it's going to go. Once again, wait until after 9:30. See where it seems like there's a brief pause here in the markets as far as which direction they're going to take these things. So definitely want to wait until after 9:30. See what direction it takes us. Whoops. We already had that one. I think one of the more fascinating ones is right here on the euro. I want to talk about the euro here for just a second, because I was out to dinner with a friend of mine who works in the financial markets. He's a financial advisor, so he works on more the long-term mutual fund type of thing. So he always likes picking my brain about trading, because oftentimes I've been able to get kind of short-term direction pretty good, and he likes kind of the insight I give him, and he'll probably he uses it, he says, sometimes to talk shop with his clients. But we were talking about the euro, and he was like, so I didn't check any currencies this week. What happened after the ECB announcement? He said the euro probably got tanked, right? remember, financial advisors generally don't look at like short-term markets, and specifically, they probably don't look at currencies. They should, but but that's just the gist of it. But he assumed that the euro went down. Why? Because Mario put out the bazooka. 3 interest rate cuts. More quantitative easing. And I said no. I said the euro initially went down, but Draghi came out, kind of shot himself in the foot, and it once again had one of its strongest days in years. I mean, even going back to December, this from the swing low to the swing high was almost 400 pips in one day on the euro, and it's really hard to make calls like that when those types of things occur, because nobody can. It's very hard. In case you haven't been, in case you. In case you've been hiding under a bridge somewhere during classes, it's very hard to call out volatility when it's going to be 400 pips. 400 pips when it's 4 times the average amount that it moves. It's very hard to try to predict that type of thing. It's virtually impossible to predict that it could have gone up. I actually thought even after it came up this amount that it was going to come back down. So I said, no, it actually went up 400 points off its low. Right after the announcement, it came down and then it went up like 400 pips. And he's like, really? So why the hell would a currency go? This is what I want to tell you. He's like, why the hell would a currency go up after that amount of monetary, after that kind of monetary policy hits the news? He said, it was a surprise, wasn't it? I said, yeah, it came out above expectations. You would think the euro would have gone down. And he said, man, that's like he said, you know what that's like? He said, that's like an S&P 500 or a Dow company, missing earnings by like, 50 or 60 cents a share, and it totally shocking the market and the stock going up. And he said, because it would make no sense whatsoever. And I said, yeah, that's exactly what it's like. Imagine a stock coming out and announcing earnings that are 50 cents less a share, and downgrading their guidance and getting downgraded by ratings companies and stuff, and the stock going up. And that's and it being a complete shock to the market. That's very much like what we experienced with the euro last week. I hesitate on the euro because there just seems to be, every time we think this thing is going to go down, it goes up. All throughout March, we've kind of thought that this could reverse course a bit. We had a decent February on the euro to where it did weaken quite a bit. So this would be, it's kind of a tough call here on the euro. But one of the things I'm kind of looking at here is the fact that if it does reverse course, if it does come down, that it has, I wouldn't consider this covering the gap, as Stephen was talking about last week, but it has a lot of room to come down back to earth a little bit, meaning there's nothing that says this thing should be staying up this high at the 111, 112 levels, especially with the FOMC announcement coming this week. It's been kind of slowly breaking down here over the last couple of hours. Another idea for you, if you're kind of shaky on the pound, let's see, what time is it? 9:29, so the market opens up here in about 1 minute. Let me just check, see where everything's at. Since euro has been so high, okay, let me zoom in here. It never made a close, but not since last week has it come down below the 111 level. And I know this is kind of the base support right in through here, but this was kind of wacky right down in here. I really wouldn't trust this level as much, because I think you can get ahead of it a little bit better. But if that euro, since it has been so strong, something you might want to check out here is, a sell entry. Look for a close beneath this 111 level after the market's open, and negative on the 1 hour totals. And put your stop 1.11371. Now the LP trend has been up on this, so people have been buying up this euro dollar. So this is certainly would be a kind of a counter trend move we'd be looking at. But I think if we start to go negative here, that we could start at least making a lower low right in through here, kind of like over here, where it kind of sided out and we started getting a lot of red candles. I think if we get a red candle here and it goes lower after 9:30 at like 10 o'clock, you could potentially see some larger moves. And it would be especially if it breaks through this low right down in here, which is only about another 20 pips away. I think you could look for a limit. This is one of the only ones here today where I think you could look for a limit of 1 to 1.5 risk reward potentially. This would be more aggressive because this would be more of a counter trend move. Like the pound would be going more towards the overall trend on the pound. This would be certainly kind of a counter move. Markets are just now opening up, so we got the Dow down 23 points, Nasdaq's down quite a bit, or not quite a bit. I'm sorry, it's down like 10 points. So markets are just now opening. So you could, if you're going to take, like Phil, I wouldn't go short on the euro if you're already short on the pound from the London breakout, because if the euro comes down, I'm thinking that the pound would probably also come down. So you probably don't want to double up on that amount of risk if you're still in that trade. Let's just check out what's going on here at this 9:30 hour. So I got that one in. Let's see here. It's all in play. Yen still hasn't moved. Pound's coming down a bit. Euro's coming down a bit. Zoom in a little bit more here on the yen and the pound. So we are at 9:30 now. But we really haven't gotten any real true breakouts from this consolidation that we're seeing. And speaking of currency traders, by the way, we're not alone. Speaking to a friend of mine that I used to work with way back in the day named Ryan, and he's also been having some troubles with the markets as of late. We actually have not done too bad. I kind of rubbed it in a little bit on the ECB trade because he got kind of whipsawed on that one. I had told him that, yeah, we actually made 120 pips on that trade. So I did kind of gloat a little bit. So hopefully that was not to the trading gods. So trading gods, that was actually just an old friend. So those are the three we're looking at. Phil, you should be pretty happy right now. Looks like it's going in your direction. Let's see here. We're still not making big moves in the markets. I mean, S&P is down 6, Nasdaq's down 10, Dow is down 36. I mean, these are barely negative moves. These aren't real big negative moves in the market right now. So we're not making huge amounts of negative movement here. It is kind of interesting that the markets are moving lower and the dollar's getting stronger. Generally not how it works, but hey. Pound is starting to make a little bit of a breakdown right in through there. What I would wait for, folks, is, if we get a close beneath that support level, that would be great. Or if it goes negative here on the 1 hour totals for you PitView traders, just use a little bit more confirmation. Yen's starting to come up a little bit, so it looks like dollar's starting to drive. Remember, you have two options for shorting on the dollar here, either the euro or the pound. I'd just be a little bit more cautious. Wait until the 10 o'clock hour. You can even wait until the 10 o'clock hour. See if it makes a strong close below that low. The yen, when you kind of look at it overall, you'd want to wait. You certainly want to wait for it to break through that neckline and go negative. It's already -5, but certainly want to wait for it to break through that neckline. We still have, the stocks are still coming down. They still haven't moved a huge amount, but be careful of the whipsaws here. What I'm going to probably do is I probably am going to wait until like 20 minutes at the 10 o'clock hour. The euro dollar or the pound dollar, I'll go with like a one cancels other order, whichever one executes first. So trigger on whichever one happens first. 10 o'clock, if this is trading below, or if pound goes negative on the 1 hour totals, I'd be happy to take that as a short, or on euro dollar as a short. And if the yen starts to break down here, we may get all of those kind of moving in the same direction today, based on the fact that up markets brought the euro up and brought the pound up. So down markets might be bringing the euro down and the pound down. So we'll just have to wait and see on that. So with that being said, I'll go ahead and save this. go ahead and share it with you. There is your handout for the day. Looking at these, proceed with caution. Don't let the market get too, don't be too quick on the trigger today. Kind of have to take more of a wait and see type of attitude. I mean, nothing's really changed in the stock market. Still down 21. Let's see, Daryl just made a comment. For whatever it's worth, this morning's newspaper carried an article that said the FOMC would not consider raising interest rates again until stronger signs of inflation appeared. Yeah, I totally agree with that, which I think is the reason why people, you know, it's pretty much an estimate that that they're going to keep rates unchanged here in March. However, with the inflation numbers that we've been having, like the PPI, the CPI, if those continue to rise on a month-by-month basis, because the next one would probably be in June. I believe it would go, what, March, and then I think at the end of April or beginning of May would be the next FOMC announcement, and then June. So if there is another interest rate hike, it's going to switch from, the expectations are going to switch from March, you know, being the big meeting, because those are usually ones accompanied by a press conference and whatnot, to June. And there's a big debate on that, because we do have to have, I mean, we have to have proof positive that inflation is rising over their 2% objective. Which so far we've gotten with higher prices of producer, and especially if oil continues gradually making higher highs and higher lows, that will contribute to higher inflation. That's one of the reasons why Bank of Canada didn't raise their interest or lower their interest rates last week, was because the oil prices in the short term have been going up. So keep an eye on these today. Probably the one that's closest, and you can kind of flip a coin between the two, but probably the one that's closest. You can see the 1 hour total starting to go negative here on the euro. If it can break through that low or close below that low here in the next 15 minutes or so, that would be probably the one that's closest to execution. It would certainly be a counter trend trade, if you will. And that pound has plenty of room to retrace also. Both of these, if they do give solid short signals, would both have plenty of room to retrace to the downside. So that's all I got for now. I got to get prepped here in 45 minutes. I'm going to send another reminder out to the NuriFX students, but we're going to be continuing on with our tutorials here in about 45 minutes. We can check the markets again hit there at the beginning at 10:30. So we will reconvene tomorrow morning to check these things out. Again, taking more of a cautionary approach here on this Monday morning, but I think that's the smart thing to do. Oh, and I should also say, Gary, I think I sent you an email. I have to go check on April 2nd, which I think you probably know what I'm talking about. So I am going to take off here. Keep watching these three. We'll see where they go, and I will chat at everybody tomorrow morning. So thanks for coming in, everyone. Bye-bye.